Hello, and welcome to Markets in Focus. My name is Joe Bell, and today I'm going to walk you through some of the most interesting financial market themes that I'm observing. So everybody knows about inflation, and this is something we talked about last year, but I thought it was interesting to bring it back up. With inflation still elevated, valuations getting pressured as equity markets decline, let's talk about why that might not be surprising historically. Number two, a couple of weeks ago, we talked about the AAII survey. We've had two reports since then. This most recent week showed a big spike up in bearish investors from the retail side. Let's take a look at historically what that means for future returns. And finally, some signs of extreme selling that perhaps we didn't necessarily see during the first sell-off, first leg of the sell-off during this trading range over the past couple of months back in late February, early March. So as I said, you have inflation CPI year over year, 8.5%. If you look on the chart here, we have an inflation tranche of year over year inflation, each tranche basically being different ranges of CPI inflation, 0 to 2, 2 to 4, and so on. And right now we're at 8.5%, which puts us in that pretty close to the far right side of the page between that 8 and 10%. That would be historically, at least on average, you see valuations around 10.5 times, which means earnings were just north of 10 times. The price of the S&P 500 was just north of 10 times the trailing 12-month earnings for the companies within that index. Right now, we're around 21 times earnings in terms of price, and we're continuing to see that pressured. Earnings themselves have not taken a big hit, but we are seeing a compression in those valuations, which is not surprising if you lean on history. Now, speaking of sentiment, up top, there's a lot of noise, if you will, on this chart, so I'll walk you through it here. We've got the past 4 weeks of AAII investor sentiment survey. So this is a retail poll asking investors how bearish, bullish, or neutral are you over the next 6 months? And we can see the most recent poll toward the end of April, 59% bearish, 24% neutral, and 16% bullish. That's pretty low. In fact, if you look back and filter the results by north of 59% bears and more than 16% bulls, or less than 17% bulls rather, it's never actually happened before. But if we relax these and look back, when the percent bearish is above 55%, at the same time the percent bullish is below 20%, that's actually only happened 3 times since 1992. We can see the 3 dates here. A couple takeaways from this. Number one, on average, we can see the 1 month, 3 month, and 6 month returns well in excess of your average normal anytime returns. So that would be a sign that, yes, these are potentially contrarian indicators, and a good sign that the market turning point might be around the corner. Couple caveats. Number two, sample size, very, very low, 3 times. How reliable can that be? That causes some skepticism. We can see here, March 2009 amounted for the bulk of these gains in terms of the last time we saw this signal. That was during the early phases of the recovery post-financial crisis, 40% return over the next 3 months. 2008, a little early at that point. So overall positive, but I don't think statistically we can say it's exactly relevant and exactly what we would expect over the next month or so. Now, in terms of technicals and price action here, up top we've got the S&P 500. There are some red X's and some green crosses, and on the bottom we have the NYSE advanced decline ratio. That's the ratio of advancing stocks and declining stocks on the New York Stock Exchange. A ratio, right? And so when that's negative, that means there's more declining issues than advancing issues. When that's positive, that means there's more advancing issues than declining issues. One of the things that we've seen during the past week or so is we've had 3 examples of trading days where we've had at least 5 times more stocks sold to the downside than stocks bought to the upside. And in fact, during the latter part of this week, we had a ratio of 10 to 1. Now that is unlike what we saw during late February, early March, which is the previous time we reached these lows. Why is that potentially a good sign technically? Well, typically you want to see that washout, that climactic selling, especially in combination with that amount of sentiment that we saw recently. Might be some short-term improvements, but you want to see, this is the big key, after these sell-offs, you want to see a renewed demand a renewed widespread buying of the market. It's too early to say that's happening right now. We had a little bit of a bounce and it remains very, very choppy. We've yet to see the confirmation of demand come back in, but I think we're near a critical point here near the bottom of the range that we've been in really throughout this volatility in 2022. Finally, I want to thank everyone for watching. A pretty heartfelt story, very interesting. A paramedic helped save a man whose car was in an accident. I believe it was on fire, helped get him to the hospital and save his life. And later they found out that the victim that he was saving was actually a doctor that helped save him 30 years previously when he was a baby from a life-saving event where he was facing a potential a life-ending event, and they were able to save him when he was a doctor. So it's come full circle. The baby that he saved 30 years later was able to save him, or help at least. So that's a great story. With that, I want to thank everyone for watching, and I'll see you next time.